This week's commentary is entitled Gearing Up for an Interesting Fall, a title only meant to be about seasonality, but we'll take a look at the data to see if it might have some double meaning. For those of you who may know me well, I hate surprises. Someone's like, oh, we'll talk about it, but we'll talk about it in 10 minutes. I'm like, no, we're talking about it right now. Hey, we're gonna go do something, it's a surprise. I'm not coming. I just don't like surprises. Maybe that makes what I do for a living an odd fit. Maybe I'm just burnt out of surprises in a world that between clients and markets and colleagues is always bringing the unexpected into my life. But after being in and around this industry for close to 30 years, I don't think I'm alone, particularly as relates to people's financial pictures and lives. And wouldn't you know it, just about the time everybody was kind of ringing the all clear, the soft landing was upon us this summer, bam, we get hit with a massive bout of volatility with some intraday metrics, as we called out in the written commentary a couple weeks ago, things that were near GFC highs, COVID highs, some truly scary moments. Why we bring this all up again? Again, successful investing is always a two-part equation around both the mathematics of investing, but absolutely around the emotional aspects of investing. And with these surprises come a lot of emotional reactions. And so how do we better prepare ourselves for what might lie ahead to be able to ease those emotional surprises, as well as make sure our portfolios are positioned in a way that whatever may come down the path, we have both an ability to respond as necessary, as well as an ability to make it through and buy ourselves the time to be successful. As I've analogized before, really what we're talking about is you jump into a lake, as many of us hopefully have been doing this summer, and it's a certain degree of temperature and you're aware you're jumping into that body of water. One experience. Laying in the sun and having your buddy throw a bucket of that same temperatured water on your back when you're not expecting it, two totally different experiences. And so the data, the commentaries, everything we do here, not meant to try to get you into a predictive mindset, but really a prepared mindset to be able to handle whatever may come with a lot less emotionality than might otherwise be the case. So yeah, there are a lot of reasons for concern. You had some serious downward revisions within employment data, 800,000+ jobs pulled back off with downward revisions to prior earnings reports. You've got a Fed on deck, not only with Jackson Hole this week, but in September with the big rate cut. Is it going to be 25 basis points? Is it going to be 50? Does it even matter? Which there's a growing camp arguing around the Fed and whether it's either too late or it's not going to be enough. This chart that we're putting up right now over my face is one you've probably seen before if you've been following the commentaries for a long time. This is just since the great financial crisis, but it just is a quick reminder of how many different things that were both real and manifest, or perhaps not as big of a threat, but dominated headlines, have come up and do come up all the time, and yet the market proves its resiliency time and time again. The point of sharing this chart is just to again remind you we've faced and overcome many challenges time and time again. As I said in a commentary earlier this year, there's always the issue, we're just swapping them out. It's like a Mad Lib. And you know, because I hear from so many people after the fact that, man, I wish I wouldn't have done X when this was going on. Well, it's going to be different each time, whether it's an election season. We've done this every 4 years, and yet every 4 years people want to know what's the plan for the election. And of course, half the people want to hear one kind of a plan and half the people want to hear a different kind of plan. And our answer is the same. Global politics, US presidential politics, historically have not mattered to US stock markets. We're not going to do anything. So again, whatever that fill in the blank thing is, it's really keeping that long-term mindset on. Why is this especially important perhaps for equity markets? Why did we have the depth of pullback and the veracity of pullback that we had earlier this month? The S&P is trading pretty expensively right now. If you look, about 35 times the 10-year price to earnings ratio. Historically, that's been more in the low 20s. And so again, we've talked about relative expectations. Something going from really bad to less bad is a more attractive investment and opportunity than something going from great to good. And so it's more, again, about relative expectations than it is absolutes. And right now, as many have said, you have a market that in many ways is, quote, priced for perfection. So if we don't get anything near what that wants, we've seen what could happen in terms of market valuations. And while many are looking at the downward revisions to jobs, some of the other reports, quick call out here, weekly jobs reports, while important to keep an eye on, shouldn't in their individuality be looked into too much. They tend to bounce around day to day, could be weather related, could be factories shutting down around the world, around the country, excuse me. Take those with a grain of salt. But while some feel, hey, these downward revisions, some of the recent jobs reports are indicative of an economy already headed to a hard landing, not everybody shares that view. Apollo's Torsten Stock pointed out data from retail sales to airline travel, restaurant bookings, hotel occupancy, all really high, really still talking about a strong consumer. We're a consumer-based economy. Still most of the GDP reports coming in 2+% on the growth side. So again, not something here to be predictive, but aware of that tension that exists, and again, prepping the portfolio. So with that, how do we prep? What are these new tools? Well, we've been telling you for quite some time not to stay myopic on just US stocks, US large caps, US tech, to make sure, again, you're really being a diversified investor, addressing each of those parts of that LIVE formula. Do you have proper liquidity, income/cash flow, volatility protection, so you can get the expected return you hope to see over time? The good news in the midst of all these unknowns is we have some new tools, or maybe some old tools that have become new again, most notably, as we've been talking about, fixed income. This last bout of volatility showed that bonds, for the first time, maybe since the great financial crisis, are once again a ballast, something that's inversely correlated or largely inversely correlated to equities. Well, the NASDAQ entered into a correction, the S&P got close, bonds are up 3%. You can see the divergence on the chart that's up over my face right now. But more than just a buffer to volatility, if you look back over the last 12 months, the Barclays Bond Aggregate Index putting up almost a 9% return, in line with kind of a historic equity type return at 8.94 as of, again, the 21st. So potential actual risks, those that may manifest, those that may not, these are an ever-present challenge to investors. They are not fatal to the well-prepared. And so that's what we want to have you, is both emotionally well-prepared, from a portfolio perspective, well-prepared. And what I love to remind clients as we get into and head into a fall, geopolitical concerns, US presidential, what's the Fed going to do, is just, again, how resilient that market is. Go back, take a look at that first chart in the video, and remember, it isn't politicians, it isn't the Fed that is the cause for that resiliency. It's us, it's you and I. It's the people who get up every day, give it their best, who really look at these struggles as a reason to, again, innovate, adapt, change, bring about new things. And so, far from being something that's really fatal to markets or the economy, usually these struggles are the things that serve as a catalyst to the next level. If you ever need help remembering that, if you ever need someone to come alongside you in the journey, we're here anytime.